We posted a poll over the weekend about what the most important thing for the markets has been. Trade and the economy coming in number one. Computers gone wild coming in number two. How important are the algos, the algorithmic traders, as we call them, in this market?
Well, someone who's been a technical analyst a long time, like I have, has noticed something different in the last, let's call it 10 years, that like this 2,600 level in the stocks is of enormous importance. It's the low for the year. It's been hit twice. This is the third time. It always seems like now that when we come within, flirting distance of that level again, now it seems like the algos have the desire to knock through it to see if they can knock out stops and weak hands. That's what I actually think is going to happen here. Although that, to me, if we do that on relatively high volume and reverse it fairly quickly, which, by the way, this is what I think is the most probability outcome, I think that's a fairly bullish scenario. In normal world, we'd say if 2,600 breaks, look out, we're going to zero. Yeah. I'm being dramatic, of course. But now I think it's a little bit different.
Listen, the Dow going down 700 to recovering like we did the other day. I mean, that's not a healthy market. That's not a normal market. That's a computer-driven market. We all hate the algos when we fall. Can all these hedge fund billion-dollar computer machine-driven trading strategies help us on the upside, Jim? Can they be the hero, not the zero?
Sure. Well, remember, too, before we beat the heck out of them, let's remember that in normal market functions, there are some liquidity provided by them, and you get better prices on, in and outs of your trades because of the algos and the HFTs. It's in markets that start to move in a direction where I see their effect as being, disproportionate to what normal market movement would be and unhealthy. But remember, we're not in a bear market, but in a corrective phase, the bullish moves, the spikes higher in corrective phases can be relatively violent on their own. But yeah, sure, they exacerbate them on the upside as well.
What's the most important thing to you this week? It's going to be another wild one, Jim. What are you watching for?
Sure is. Well, from the sentiment standpoint, it's that 2,600 level. But when you go to the fundamentals of it, I think the Fed and China are tied. The thing that has surprised me the most is that, yes, the Fed has come out and said they think things are slowing, and their response is going to be to be less hawkish. I'm surprised that people are hooked onto the fact that the Fed thinks things are slowing. I've never really viewed them as a fantastic prognosticator. I think the takeaway is that they're not going to be as hawkish. Goldman this morning says that there's a less than a 50% chance of a March hike. I think the markets are reflecting that as well. To me, that's a relatively big and bullish deal.